Let's get to our guest, who also has a focus on Latin America. We're speaking with Kathryn Rooney Vera, Baltic Head of Research and Strategy. Kathryn, your outlook for this sort of reopening in phases that's beginning now, and how much it will help this economy?
Hi, Vani. Look, from a market's perspective, liquidity has trumped fundamentals. We think that has a limit, and the tide will begin to turn towards fundamentals if and when the market's discounting of a really almost fantastically quick resolution to the crisis is not realized. And I think that's what's happening right now. The risk that, of course, we run is that this is not a V-shaped recovery, nor a U-shaped, but a W-shaped recovery, which means that we reopen and there's either a mutated version of this crisis, Vani, or we get a second bout in the latter half of this year, causing another closure of the economy. So I think that's probably the primary risk at this point. I think that as we move closer, we're off a couple points, but I think we're way too overbought in the equity market. So we are recommending our clients to start to realize profits and outright sale of risk assets in the form of both equities and fixed income moving into cash.
Yeah, that's fascinating, Kathryn. And what about the president's comments regarding China? Is that narrative going to come back into the market? And if so, will we hold on to the gains that we've made?
Yeah, I think certainly one should expect both the Democratic candidate and the incumbent president to speak in populist tones and go aggressively, at least in verbal form, with regard to China, given the polling showing that there is some ill will towards China, and the voting population would like to hear something of that from that extent. So it doesn't surprise me. I expect more of it to come, and I expect it from both sides. And I think that you're going to see an increasingly populist wave come to the fore from the politics side, given that you have both monetary and fiscal stimuli really juicing the markets, making the rich richer, while there's 36.5 million people looking for unemployment benefits, and the labor force really bleeding. So I think that divergence in fortunes is going to cause populism to actually continue its trend stronger.
So you're recommending that people trim positions. What should they do, Kathryn? Just build up a bulwark of cash?
So as the market moves towards record highs, we are, 12, 14 points off of record highs, which is shocking given that we're in the best case scenario, a recession, and in the worst case scenario, a depression. So we are recommending outright sale, as I mentioned. With volatility beginning to come down, we're looking at put option hedging strategies. They're becoming more cost effective. We're looking at out-of-the-money contracts with longer expiries, at least through the end of November, just to help to manage, Bonnie, the additional potential risk associated with the general election, as you mentioned, further political risks. A rotation or rebalancing out of equities and overweight fixed income if we do, in fact, get to closer to record highs. But as I mentioned, I am expecting a downdraft here. I think that the only thing that can keep markets going higher is the Fed continues to juice the markets, buying more and potentially different types of assets, even finding ways to buy alternative asset classes beyond high-yield fixed income, a vaccine announced, or the economy is successfully reopened, all of which I think are tall orders.
I want to get to Latin America, Kathryn, because you focus quite strongly on countries like Mexico, for example, and we are anticipating another cut later on, perhaps 25 basis points, 50 basis points, more even potentially. It's Latin America's second biggest economy, and it's seeing a bit of a spike in rates of coronavirus. Pemex, for example, having a big problem. What do you do about Mexico and Mexican investments right now?
Mexico is in dire straits, Vani. We think the economy will have an L-shaped recovery. We're expecting a contraction this year of near 10% of real GDP. Mexico is set to lose its investment-grade status, we think, over the coming 2 years. All of this is being priced into the market. As you can see, the Mexican peso has been severely beaten up, and we do anticipate a downgrade this year in the rating category. This is putting serious pressure on industries like tourism, entertainment, construction, and is impacting the value of Pemex. So, look, this is going to be very ugly for Latin America. Mexico and Brazil are probably going to be some of the worst hit, given the administration in both countries' reluctance to, even acknowledge that this is a viral risk to people's lives. So they were very delayed in their response. The Mexican stimuli has been so paltry that it's really nothing to even discuss. There's been no fiscal expenditure to speak of. And Mexico is almost, Bonnie, becoming known as, and AMLO is becoming known as the fiscal hawk of the region for the lack of spending.
Yeah, it's really fascinating. Now, there had been a bit of a pile-in to Latin American bonds. I mean, not, just a uniform pile-in. Obviously, it was certain countries and certain types of bonds. What happens now, Kathryn?
Yeah.
Is the country, Mexico specifically, maybe Brazil, are they investable?
Look, I think that if you do it, as I do, expect a downdraft and a aversion to risk in coming in the floor over the next couple of months, you don't want to be investing right now. In fact, I would say sell, realize your gains. As our fixed income desk has said, Lonnie, liquidity has improved drastically in the past 2 weeks. Prices have bounced back to levels that we deem expensive. So we think it's a great opportunity to realize gains, sell those bonds that expose the portfolio to both volatility and duration, raise some cash, and look for further opportunities in coming months.
All right, and the Mexican peso, I just want to point out, is 0.6% weaker before that potential Banxico rate cut later on today. It's trading at 24.33. Our thanks to Kathryn Rooney Vera, Baltic's Head of Research and Strategy.